You have talked in the press conference just a few moments ago about progress in the U.S. China trade realm. The markets seem to be confused. There was an announcement of a first step. That now seems to have dissipated somewhat, that enthusiasm at least, and there's a lack of clarity. You have deeper and more insightful conversations with both parties than I do. What substantial progress do you believe has been made?
What we understand from both sides, I actually started the day with Governor Yi Gang of China. I met with Secretary Mnuchin yesterday. What we hear is very constructive attitude and a commitment to identify remaining differences and then focus on those. In other words, cash what is already agreed, and apparently on a number of issues there is 100% agreement or close to 100% agreement. And if the focus is on the remaining differences, there is a very good chance that an agreement can be reached. The interest in agreement is motivated by a very simple, common objective. Harmful for the economies of both countries. More harmful to China for obvious reasons. China is more open towards the U.S. and more dependent on the trade relations with the U.S., but also negative for the U.S. We have done a calculation on what exactly are we talking about, what is the impact, and it is quite significant. By 2020, tariffs already imposed or announced would shrink global GDP by 0.8%. That is the equivalent of the whole economy of Switzerland. So the motivation to find a pathway to a deal comes from the fact that the world economy is slowing down. We are in a synchronized slowdown. 2 years ago, we were in synchronized upswing. So you can take more battle attitude when the world is doing well, and one has to be more careful when this is no more the case.